good morning, Aurora. Hope everyone is doing well this morning. Either you're getting ready to work or on your way to work. Today, on the segment of State of the Market, we have our guest of honor, Anthony Garcia and Juan Lopez from Great Mortgage, the Good Life Good Team, correct?
Home team, yes,
Home
sir.
team. I want to
Yeah.
get that correct.
Yeah, no worries.
Today, we want to talk about certain topics, including what happens when you trying to buy a house, certain myths or misunderstandings, and that is bad credit, income, down payment, or limited down payment. And with that said, I'll let the guys, the experts in the industry, mortgage brokers, take in charge.
Well, thank you, Aaron, and good morning, Aurora. I'm here with my buddy, Anthony Garcia. We've been working together, I don't know how long, like too long, put it that way. But, a lot of times we get a lot of calls, and it's the ones that don't call us that kind of bother me a little bit. And it's more like people don't know. Mm-hmm. They don't know, what does it take to buy a house? I was talking to my barber the other day. He was like, yeah, man, I was talking to a couple guys. And then other people hear it, and they're like, well, yeah, I'm saving 20 grand to buy my house. I think I need 20 more. I'm like, what makes you think you need 20,000 more dollars?
That's true, yeah.
So a lot of people just don't know how easy it is to apply. And there's not a certain dollar amount somebody needs. All you really need to do is contact us, contact me, contact Tony, and we'll take it from there. We'll guide you. And if I'm not mistaken, the first step is to get pre-approved. Sometimes people go straight to you, Aaron.
Yeah, they do.
And they're like, hey, I want to buy a house. And unless they're buying cash, they need a pre-approval from either Tony or I.
Mm-hmm, mm-hmm.
And that pre-approval, we can do it right over the phone.
Mm-hmm.
And we're just taking basic information like name, address, social, and their income.
Mm-hmm.
And a lot of times, it's just that first phone call. And we realize that it takes a lot just to make that first phone call to us. And we treat it that way because we need to get it started somewhere. Call us, give us a ring, and we'll guide you through the whole thing with the help of Aaron. And social media and people's aunts, uncles, brothers, maintenance, cousins seem to know more about mortgages than we do, but they do not. And this changes like every day. We get new guidelines like every week, let alone from when the last person bought that house, 15, 20 years ago?
Right.
And especially social media, like what kind of stuff you see on social media today that it's not accurate, it's misinformation.
Yeah.
What kind of things have you seen, Tony, like when people call you?
Well, a lot of times people, like Juan said, they'll ask a friend, a relative, their barber, someone that is not in the industry, and they're not the experts, All they have to do, and we don't understand, is why won't they just call us, call the expert, call somebody that does this for a living, instead of asking everybody else, call somebody that's going to be able to help you, that's knowledgeable, that has the experience like we have. We have over 50 years experience. We've been doing this for quite a long time.
We started when we were like -5 years old.
Yeah,
right?
yeah.
Right.
I mean between both of us.
Right.
And it's just like, we've been in the industry. We've done just about all types of mortgages. Like Juan said, guidelines do change all the time. No loan officer can say, well, I know everything about everything, because something could have changed. Right now, something changed with FHA. Now, we won't go into specifics here, but I mean, there's certain guidelines that your cousin or your uncle or somebody's not going to know. That's where the experts come in. So all we say is pick up the phone, call the expert, give us a call, and we'll see if we can help you out. We try to not, we try to say that you're not turned down or anything like that. We try to say, what, here's what we need to do to get you there, to get you approved.
We give them a roadmap.
There you go.
So if they don't qualify today, we're going to show you how to get there tomorrow. Sometimes it might be next week. Sometimes it might be a month.
Or next year.
If they want to, they sign a lease. But really, unless they had a bankruptcy or foreclosure, there's no need to wait a year. A bankruptcy and a foreclosure have mandatory wait times, 2 years for a bankruptcy, right? Mm-hmm. And 3 years for a foreclosure. But even now, there's programs, if you have down payment, that allows you to do it one day after a foreclosure or a bankruptcy.
Yeah, and like you said, there's programs because we're brokers, so we have an avenue of where to go with different types of lenders. We have over 50 lenders that work with us.
Wow.
I think even more, and they're not all doing the same type of program. Some of them have that 1 day out of bankruptcy program. Some of them even have the 1 day out of foreclosure program. But we have to, basically find out what the customer needs, and then basically match them up with the lender. So.
Okay. Let's go quick to our comments right now. It's 9:06. Daniel Calderon. Good morning. Good morning. Thank you for tuning in. The Neighbor Project and everyone else who maybe is a little bit shy, doesn't want to say hi. It's okay. Just be sure to share this program with the family, and it's very important information about the myths and the facts about getting pre-approved in order to buy a house. And we're here with Anthony Garcia and Juan Lopez from Gray Mortgage. They're the ones who get you the pre-approval. Once they get you the pre-approval, I can help you find the house to get under contract. So let's go with the next topic. Most people think they need 20% down, but we don't. Was with that was.
Well, that's correct. And again, it goes to awareness. What does it take to buy a house, especially in this market?
Mm-hmm.
And a lot of times people are scared to pick up the phone and give us a ring. Why?
Mm-hmm.
We don't know. We don't know why. You don't even know why until you call us.
Mm-hmm.
But take that first step and give us a ring. And what we found, we've been doing a lot of loans. And a lot of times, we're not the first person they contact. A lot of times the customers, they gotten turned down somewhere else, or they talked to the barber's cousin's donkey's friend's cousin or something like that. And they told, oh man, you can't get this loan. So now they're discouraged. But when they call us, again, we want to give them that roadmap. And we find out just through experience, there's 3 main reasons outside of awareness that people don't buy. One of them is down payment. Oh, I don't have a down payment. Another one is, well, I don't make that much money, especially the people who are self-employed. And then the final reason that we see, there's many of them, but just like the top 3, is going to be, well, my credit is not that good. It sucks. What can I do about it? So we can break these down a little bit. And you mentioned a lot of people, I still hear it to this day, I need 20% down. No, you don't. You need 20% down to stay away from what we call mortgage insurance. Don't confuse that with homeowners insurance. Mortgage insurance only protects the bank. And I got news for you. Regardless of what kind of loan that you're doing, which bank you are using, you're going to have mortgage insurance. There's some banks out there, oh, we don't charge mortgage insurance 10% down. Yes, you do. They hide it. And the interest rate, it's higher. You're going to have mortgage insurance unless you put down 20%. And back in the day, like, I don't know, 60s, 50s, before our time, and it was 20% down.
Way before our time.
Yeah, way, like Ice Age times. Yeah. It was 20% down, and somewhere down the line, it just people still think today that you still need 20% down. Mm-hmm. But you do not. We have programs right now, what, Tony, with 0% financing? 0% down payment?
Yeah, we have 0% down payment with down payment assistance.
Can you share a little bit about that so the public can?
That would be for every program, we have down payment assistance. Every program you have to qualify, even whatever the state offers or even the Choose Aurora program here in Aurora. You have to qualify for it. It's not just an automatic thing. We've done quite a few of them, and people are like, well, I want to qualify for this. But we have to run the numbers and make sure that they do. But we'll make sure that we can get them there if they don't qualify right from the application. But we have the down payment assistance programs for 0% down. Okay, that's for FHA products, and we also have a 1% down program for conventional products where the customer comes in with 1% and we put the other 2.
Wow.
Yeah.
So in a nutshell, FHA does 100% financing. And the FHA is one of many different programs that is out there for you to buy a house. And there's limitless amount of programs. The most popular ones are FHA, conventional. And if you're in the military, that's VA. If you want to buy out on the boonies, like the ranch, right? Some people are getting ready for retirement. I want my ranch out in the middle of nowhere. There's USDA
yeah.
loans, which also offer no money down. So does VA, and VA rightfully so. Our veterans, you earn that benefit. You can buy a house with no money down and no mortgage insurance for you. That's the only exception. Veterans do not pay mortgage insurance, and again, rightfully so.
Yep.
But in a nutshell, FHA is one of the most popular programs. FHA is going to say, hey, we're going to finance 96.5% of what the house is worth. You got to put down 3.5%. Then there's this program with down payment assistance. They're going to let you borrow that 3.5% down. Keyword is borrow. It does have to be paid back. Sometimes there's certain terms on there. It varies. Because, again, there's so many different programs with that one. But in a nutshell, that 3.5% down, they're letting you borrow it. So you can buy a house with no down payment. The 1% down conventional, it's free money. It does not get paid back. Doesn't matter if you sell the house the very next day after you buy it. Doesn't matter if you sell it next year. It does not get paid back. It's free money. It is not a loan. I tend to like conventional a lot better, especially in this market, Aaron, right? Conventional and a pre-approval versus an FHA pre-approval. It's night and day. And as a loan officer, I don't think it should be. But can you explain to us why you sometimes sellers prefer conventional over FHA?
Well, let's just kind of take it back a little bit with the state of the market. Ever since COVID, we're so limited in supply. So that means house available on the market for sale. So that, because we're so limited right away, it creates a lot of competition within buyers. So then the seller rightfully can be, you know what, take it as it is, the house, and we don't want to take FHA loans. We prefer conventional. And since FHA, wants no peeling paint, no broken windows, that's a few that I can pop in my head right away. Other things I see, like, they want for safety measures, handrail on certain things. Something that says like the steps outside the house or even inside the house, they're in bad condition. Yes, I know FHA is gonna flag that. Sometimes the garage. So yes, so that's the reason why in this market, preferably if you can go conventional, but if we can't, then we gotta just go with it, go with the punches, and let's roll with it. Because sometimes it is luck that we get something, and sometimes we can get with a seller that is willing to do certain repairs, and there you go. And I talk with the buyers just like that, because I got to put the right expectations for the market. I don't need them to be like, "Whoa, you didn't tell me." And even then, sometimes they can get like that. But my job is to put the right expectations, and then once I hand them over to you guys, be like, "Hey, they're gonna ask you more info, this and that. You gotta give them the documents, and everything that has to do with the numbers is with the lenders."
That is
not
correct. Yes.
me.
Yeah, correct. And a lot of times, it's a good point, because a lot of times people call us, and how many times they think, Tony, that we're the ones selling the house? I want 3 bedrooms. I want a bath.
Yeah.
It happens more often than you could imagine.
Yeah, that program. I understand what you're saying about the market. I mean, it is what the market is. A lot of sellers don't want. They want to just, hey, I just want to sell the house. I'm not trying to. With this market, they don't really need to do any repairs or anything like that. And that's why we have that 1% down program for conventional. It's a great program.
It is.
Some customers. I mean, when we first talk about the loan, we give them all the numbers, and it's usually 3 or 5% down. And then at the closing, we kind of let them know, hey, you know what, we went ahead and qualified you for this program. So when they find out how much less, picking up that bill for us.
It's party time.
Yeah.
Yeah, and that's the perfect time to ask for referrals, right?
Yeah.
And that's something that Tony and I pride ourselves in. Every single loan that we get, every customer that we get, it's all referral. So thank you.
Yeah,
and that's the best compliment we can get as loan officers.
Yeah. So Let's talk about something about a multi-unit. How does those work? Because I know I have encountered a few buyers that are like, "Well, I want a multi-unit because they told me I can rent the other one, and then if I want to buy my second one, I can use that as a income too. But what if I don't? I'm limited on my income. Can I take their other rental income as like my income too?" So I just let you explain all that, but
Right.
that's what buyers, they approach
Right.
me and I'm like, yes, but again, talk to the lenders. They're gonna run the numbers.
Right, right.
And then once they give me the pre-approval, it's a fair game. Let's go.
That's right. So that's the second reason that we saw that people don't buy. Well, I don't make enough money. And in today's environment, you've seen how much these houses have risen in value, which makes them a lot less affordable. But if you're not paying a mortgage, well, let me rephrase that. If you don't own a house because you're paying a mortgage, I got news for you. Unless you live with mom and dad, which I'm gonna tell you, come on, man, you gotta move out. But if you're paying rent, you're paying a mortgage. It's just not yours.
Yeah.
So, reverting to your question about multi-unit, I'm gonna let Tony take this away because what better way to explain it than somebody who actually experiences it?
Tony, take it.
Well, as far as buying a second multi-unit, or let's just go with the first one. I mean, basically, if you're trying to qualify for a multi-unit, which is more than one unit, more than a single-family unit, we can use the rents to help with paying the mortgage. So, or to help you qualify, basically, is what we're saying. That being said, that's if you're going to try to buy it as an owner-occupied person. So in my situation, when I bought my building, I have a 3-unit building. So what I did is I did qualify to buy the unit by itself, but had I not been able to, I could have used the rent from the other 2 units to help me qualify.
And that was your first house,
That was my
correct?
first house. So now let's just say if I'm going to transition, like if I want to buy anything less than a 2-unit, or excuse me, anything less than a 3-unit, like a single family. Let's just say single family. And right now I could purchase that, and if I had a lot of expenses or a lot of liabilities or a lot of car notes or whatever, and if I didn't qualify with it just on my salary, just on what I make yearly, then I could use the rents of the other 2 units to help me qualify for that home. So basically, I would have my income plus the 2 incomes from the 2 rental units plus the one that I'm vacating as well. So I'd have 4 streams of income there coming in.
So
to
Tony's
qualify
banking,
for that,
dude.
for that for that
Yeah.
program, you know what I mean? So basically, yes. To answer your question, you can use rental income to qualify for a purchase.
So on that note, I had a lady come in, and she's been turned down by several lenders because she doesn't make enough money. She was making like $18 an hour. Juan, what can I do? I'm tired of paying rent. Well, she said the key words, tired of paying rent. Well, let's get to, here's the reason you don't qualify. And this is something that a lot of loan officers as a whole, we don't do. We don't tell them why not. We just tell them, sorry, I can't help you, and don't explain things to them. So in this specific situation, I told her, this is what we're doing. This is why the other banks can't help you. Because your income, you don't make that much. So what we got to do is find you more income. How do we do that? Legitimately, right? How do we do this? And we got to create more income. Juan, how do I do that? She asked. Well, unfortunately, don't swing for the fences just yet. And by that, I mean don't go for that single family residence. So go buy a multi-unit. How can I do that? Well, you got to buy a house that's 2 apartments up to 4. That rent that you're going to charge, it's more income for you. I can do that? Yes, you can. Of course, you got to qualify, and she met the qualifications as far as credit score and the other things like assets, time. It's a lot of things that go into an application, not just credit score, not just income. So it's a lot of, there's actually like 12, 13 moving factors on the house. So either way, this lady bought her house, a 2-unit, and her biggest fear was, Juan, but I don't know. What happens when something goes wrong? Well, at least it's your house now.
Mhm.
And correct me if I'm wrong, don't you have to do repairs around your rental apartment right now? Yes. Is this mortgage going to be cheaper than what you're paying for rent? Yes. Are you not going to be collecting more deductions because interest rates tax deductible, taxes are tax deductible, and those repairs that you got to make, tax deductible. So now you're on the path to build wealth. So she was like, well, I don't want an apartment. It's a sacrifice. I get it. So why not make that sacrifice for yourself instead of for your landlord? Right? Because right now you're really living in that situation. You're living in an apartment complex. So do it for yourself. Give yourself another year. Get the second income. A year from now, once you get your feet wet as a homeowner, then go get that single family residence. Because now not only do you have your income, the rental from the upstairs apartment, but you're going to be leaving that one. That's what Tony referred to as departing residence. So you went from 1 income to 3. She banking, y'all. You know? And now not only are we making her a homeowner, but she's on her path to building wealth. And that's what real estate represents.
Exactly. You put it correctly. It's 9:21. Let's say hi to the comments over here. We have Tracy Duran. Good morning. Thank you for tuning in. Thank you for everyone. Jose Pais, another good interview. Tuning in. And thank you for everyone. I appreciate the comments. We're here talking about the requirements and debunking some myths about home in order to get qualified for a home purchase, and that's why we have the experts Anthony Garcia and Juan Lopez from Great Mortgage. And let's talk about the don'ts, the things not to do, like when we're under contract or trying to buy a house.
Well,
take it away, Tony.
Number one is once you qualify, once you're looking for your house, I guess I'll do the first one. Just don't quit your job. You know, believe me, it's hard to really believe that people have done this before, where a customer has been qualified right before closing. You know, maybe they'll look for the job, maybe they'll look for the house, and the week before or something, right before we're going to close, so they've quit their job or they've changed their job. A lot of these lenders do verifications of employment prior to closings. You know, they have to. It's you know, they're taking the risk with putting the money out there.
It's part of the guidelines.
Yeah. So, you know, don't quit your job is basically number one rule, you know, and when you're looking for a house. Right?
Well, it just happened to me.
Well,
It just happened to me. This lady, she told me she got laid off, but they went on social media and started bad-mouthing their employer, and they got canned. It's the same thing. She didn't quit a job, but she got fired, right?
You can look her up. She's right here. No.
So either way, she didn't tell me, and sure enough, we call. We have a department that does that. Oh, she don't work here anymore. So I call the client. Oh, that's okay. I'm selling my house. I'm buying a new one. I got a lot of money. Like, no, it's not okay. You don't have income anymore. You need to get a new job. She found a new job. And then she calls me a week later. Hey, Juan, my old job called me back. Don't quit. She did it again. Not once, but twice. I'm like, you're killing me. She took like 5 years off my life. This beard, I had no white hairs last week. It was her. I blame her. Monica. I'll leave it at that. But yes, we're going to call and verify employment at first and then towards the end. We ended up closing her, though, because we had to wait for the check stub. And sometimes companies take 2 or 3 weeks to give you this check stub, right? So we closed her. Luckily, she had a good attorney that kept the contract intact. And another do not is don't open anything new.
Well, hang on a second.
Go ahead.
Which other banks, in that situation that he had with that customer, which other banks would have just turned her down? I mean, basically 99% of them. Yeah. And we find a way. We find a way to do it. And we have, you know, we have different, like I said, our lenders have a little more lenient, or we, you know, they go with the guidelines, but as long as we're able to figure it out, that's mainly where our experience comes in.
Before we go to the next, what you're gonna say, we have a question in the comments. I want to want to ask this. I think it's a really good questions. Josue Pais, he's asking, how about if you want a commercial property, does it go the same way as a home property?
So commercial property is a lot different. Commercial properties, most of them, in my experience, have been balloon loans. In other words, the payment is only fixed for so long. Not only the payment, but the whole loan. And it's usually 5 years. That's why it's called a balloon. And in 5 years, it pops, meaning the balance is due. Meaning you either got to put up the money that you haven't paid off yet, and most of these loans, they don't allow you to prepay like on residential. So you cannot prepay the loan. So you have to, the bank's gonna get their money. So in 5 years, you got to refinance, or hopefully your business made that much money where you can pay the whole thing off. So again, commercial's a lot different. There's a whole set of different guidelines. We can leave that one for another segment, but Mr. Baez, give me a ring, 630-362-1888, and I'll be happy to walk you through that process, because that is a really good question. Yes, we do those loans, and yes, they're a lot different, and it's a little more in depth that I can discuss within this time frame that we have left in this program.
Yeah, we have about 3 minutes.
Got it.
3 minutes. So the next few
Okay, go ahead.
key points, which if we can know not to do during.
So don't buy anything new. Don't go get that new car unless you went with another loan officer. Go get that car, okay? But if you're with me and Tony, don't buy anything new. Don't co-sign for anybody.
Don't do it.
Large deposits in the bank, cash, not your paychecks, not direct deposit, cash. If you have 3, 4, 5 grand sitting around, don't go put that in your bank. We cannot use cash for down payment, and it creates a big problem. Delays, problems equals delays. Delays equals unhappy parties, right?
Everyone is really upset.
Yeah. So again, it's very important. Don't open any new credit. Can you use your credit cards? Yes, you can. Don't make late payments on that credit card, because we'll get notified, and that's going to change your whole loan to the point maybe we can't do it anymore. And the last but not least, don't use any other bank. Just me and Tony work all of them anyways. And our rates are better than theirs. I promise you a steak.
Simple as that.
Yeah.
There you go. There you go. It's 9:28. Few little things you want to say to the public before we actually have to leave. Want to say your socials, your phone numbers. I know you said yours, Anthony.
My number is 630-303-7173. But you can contact either one of us.
Yes.
And we'll be more than happy.
And my social security number is 384. Just kidding. But at social media, you can find us under the Good Life Home Team at Great Mortgage on Facebook. I'm too old to do any other kind of social media, so that's the only one that I have right now. Hopefully my kids can put me on Instagram, and I think I have a TikTok out there. One of my peers helped me establish under, I think it's Juan Lopez, I'm not even sure.
I don't use TikTok.
Yeah, but my direct line is 630-362-1888.
Something you want to tell the public before we leave?
Not just give us a call. Give us a call, and we'll take care of everything. We're always available. That's what I always try to put on Facebook. We're always available.
All right. Well, thank you, people, for tuning in today. Be sure to share this program later on. And next time, we'll be here next week again. Thank you.
Feeling bullied by your bank?
Hey, I got a random overdraft fee.
You've reached our main menu. If you're disputing an overdraft fee, please press 4. Or just hang up and call back tomorrow.
Are you pretending to be a robot?
Goodbye.
Stop banking the same way, expecting different results, and start banking where you matter. Wintrust. Different approach, better results.
YEP gives me a lot of hope for the future, not just here locally, but as those kids go out into the world and they share their perspectives and their passions, it's going to be infectious. It's going to spread. So they're just an amazing organization that sets their partners and this community up for success. The future of this community, and honestly the country and the world, is bright with the kids that are on that YEP program, because they're going to save the world. They're doing incredible work, and to just get to know them and learn about their passions was a very fulfilling experience for me. Without the Community Foundation, it would be much more difficult for Hesed House and so many other organizations here locally to enact our mission on a daily basis.